Yo, what's up everyone, it's Your Name back with you today, and let's dive into a topic that's been generating some serious buzz in the crypto world lately, Pi Network versus Bitcoin. We're talking about two very different approaches to cryptocurrency, each with its own set of pros and cons. Bitcoin, the OG cryptocurrency, needs no introduction. It's the one that started it all, but Pi Network has been making waves with its unique approach to mining. So in this video, we're going to break down the tech specs, compare these crypto contenders head-to-head, and try to answer the big question, which one comes out on top? Is Pi Network the future of cryptocurrency, or will Bitcoin continue to reign supreme? Stick around to find out. Alright, let's kick things off by talking about mining. Now, if you're familiar with Bitcoin, you know it uses a proof-of-work system. That means miners are solving complex mathematical problems to add new blocks to the blockchain. And that takes a ton of processing power, which translates to massive energy consumption. We're talking about warehouses full of specialized computers running 24/7, and that's a big concern for a lot of people, especially when it comes to the environmental impact. Pi Network, on the other hand, takes a completely different approach. They call it mobile mining, and it's designed to be much more accessible and energy efficient. Instead of relying on raw computing power, Pi Network uses a consensus algorithm that leverages the security of social networks. Basically, you just download the Pi Network app on your phone, verify your identity, and then mine Pi by simply checking in once a day. No need for expensive hardware or crazy amounts of electricity. Now, this difference in mining philosophy has some pretty big implications. Bitcoin's proof-of-work system is incredibly energy-intensive, but it's also very secure. The sheer amount of computing power required to attack the network makes it extremely difficult. Pi Network's mobile mining, while more eco-friendly and accessible, raises questions about its security and potential for centralization. After all, if anyone with a smartphone can mine Pi, could that make the network more vulnerable? And how do they prevent malicious actors from creating multiple accounts to game the system? These are all important considerations, and we'll dive deeper into the security aspects in the next chapter. But first, let's talk about the differences in decentralization between Pi and Bitcoin. Decentralization is one of the core principles of cryptocurrency. It means that no single entity, like a government or a corporation, has control over the network. And that's a huge deal when it comes to things like censorship resistance and financial freedom. Bitcoin has always prided itself on its decentralized nature. The network is maintained by a distributed network of miners around the world, and no single entity has the power to alter the blockchain or censor transactions. However, there have been concerns about the increasing concentration of mining power in the hands of a few large mining pools. This could potentially give them a significant amount of influence over the network. Pi Network, being a newer player, is still in its early stages of development. They claim to be building a decentralized network, but it's important to note that the Pi Network is not yet fully decentralized. They're currently in a phase called enclosed mainnet, which means that Pi is not yet tradable on exchanges, and transactions are limited within the Pi ecosystem. They plan to transition to a fully decentralized mainnet in the future, but the timeline for that is still unclear. So how does Pi Network's approach to decentralization compare to Bitcoin's? Well, it's still too early to say for sure. Bitcoin has a proven track record of decentralization, but it's also facing challenges in maintaining that decentralization as the network grows. Pi Network, on the other hand, is still in the process of building its decentralized infrastructure. They have a clear vision for decentralization, but it remains to be seen how effectively they can implement it in practice. The level of decentralization that Pi Network ultimately achieves will be a crucial factor in determining its long-term success. Users will be looking for assurances that the network is truly decentralized and resistant to censorship and control. Now let's move on to the big question. Can Pi Network actually replace Bitcoin? We'll explore that in the next chapter. Chapter 3. Can Pi dethrone the Bitcoin king? Okay, let's address the elephant in the room. Can Pi Network actually replace Bitcoin as the top dog in the crypto world? It's a bold claim, and to be honest, it's a really tough question to answer definitively right now. Bitcoin has been around for over a decade. It's weathered storms, seen incredible growth, and gained widespread recognition. It's the gold standard of cryptocurrency, and its advantage is undeniable. Pi, on the other hand, is still relatively new on the scene. It's still in development, and its value is yet to be determined on the open market. But that doesn't mean it can't become a major player in the crypto space. Pi Network has a few things going for it. First, its mobile-first approach makes it incredibly accessible. Anyone with a smartphone can start mining Pi, which potentially opens up cryptocurrency to billions of people around the world who don't have access to expensive mining hardware. Second, Pi Network's focus on energy efficiency is a big deal in a world that's increasingly concerned about climate change. As more people the environmental impact of Bitcoin mining, Pi's eco-friendly approach could be a major selling point. But Pi Network also faces some significant challenges. One of the biggest hurdles is gaining trust and legitimacy in the crypto community. There's been a lot of skepticism surrounding Pi, with some critics questioning its legitimacy and long-term viability. Pi Network will need to address these concerns head-on and provide clear, transparent information about its technology, development roadmap, and long-term vision. They'll also need to build a strong track record of security and reliability to gain the trust of users and investors. Another challenge for breaking through the noise in the already crowded cryptocurrency market. With thousands of cryptocurrencies vying for attention, Pi Network will need to differentiate itself and convince users that it offers something truly unique and valuable. Ultimately, whether or not Pi Network can replace Bitcoin is something that only time will tell. Bitcoin has a massive head start, but Pi Network's innovative approach and focus on accessibility and sustainability could disrupt the crypto landscape in a major way. Now, let's shift gears and talk about the investment potential of both Pi Network and Bitcoin. Chapter 4. The investment dilemma: Pi or Bitcoin. Alright, let's talk about the investment side of things. If you're looking to put some skin in the game, should you go with the established giant Bitcoin, or take a chance on the up-and-comer Pi Network? Well, as with any investment, it's all about risk versus reward. Bitcoin is the more established and well-known asset. It's been around for over a decade, and its price has seen some wild fluctuations, but it's also delivered incredible returns for early investors. However, Bitcoin's price is already quite high, and some analysts believe its potential for future growth may be limited. It's also important to consider the regulatory landscape, as governments around the world are still grappling with how to regulate cryptocurrencies. Pi Network, on the other hand, is a much riskier investment. Its value is currently unknown, as it's not yet listed on any exchanges. Investing in Pi at this stage is purely speculative, and there's no guarantee that it will ever achieve significant value. However, the potential rewards are also much higher. If Pi Network can successfully launch its mainnet, build a thriving ecosystem, and gain widespread adoption, early investors could see massive returns. It's important to remember that investing in cryptocurrencies is inherently risky. The market is highly volatile, and prices can fluctuate wildly in short periods. Never invest more than you can afford to lose, and always do your own research before making any investment decisions. Don't just blindly follow hype or get caught up in the fear of missing out, or FOMO. Look at the fundamentals of each project, consider the team behind it, their track record, and the long-term potential of the technology. Ultimately, the decision of whether to invest in Pi Network or Bitcoin is a personal one. There's no right or wrong answer, and the best approach is to carefully weigh the risks and potential rewards based on your own individual circumstances and risk tolerance. So, there you have it. Pi Network versus Bitcoin. Two very different approaches to cryptocurrency, each with its own set of strengths and weaknesses. Which one will ultimately come out on top? Only time will tell, but one thing's for sure. The world of cryptocurrency is constantly evolving, and it's an exciting space to watch. Whether you're a seasoned crypto enthusiast or just starting to explore the world of digital assets, it's important to stay informed, do your research, and make smart decisions. Are you Team Pi or Team Bitcoin? Comment, Pi is the future if you support Pi. Subscribe for more crypto comparisons.